Okay, good afternoon, everybody. Let's go ahead and get started. Let me know if you guys can hear my audio and see my screen in the chat box. Just give me a little Y or yes there, just to let me know that it is indeed working. Hope everybody's having a fantastic afternoon. Hopefully your trading's been off to a good start. Looking forward to going over this basic trading webinar with you guys today. I had a few requests come in. Some people asked me if I could share some of the other things that I do in the markets outside of price action and the COT report strategy. And so I wanted to share some of the other original strategies that I traded in the beginning of my trading career, and how those strategies helped me kind of move forward and gave me another option to make money in the market. So I just wanted to give you some more insights today, give you another option. I also wanted to help along with this webinar kind of go over how to identify candlesticks, the different types of candlestick patterns, and how a candlestick can tell you a lot about the market. So basically how to read it, and when a candlestick says something, what your mindset should be telling you when you look at that candle. So I'm excited to go over that today with you guys. Like I said, I just want to welcome everybody here. If you're new with us, let us know in the chat box where you're from, what state you're from, or what country you're from. If you are watching this on YouTube, let us know in the comment section down below. Just also want to give a shout out to those of you on YouTube or those of you in the recording. Just want to say hello to you guys and welcome you to participate in any way that you can. If you are not here live, feel free to ask questions and I'll still get back to you after the webinar. That's totally fine. If you are here live, feel free to use the comment section or the chat box function and I can answer your questions as we go along. So David says, Sugarland, Texas. Awesome. Good to see you here. Glad that you would join us today. Awesome, guys. Well, let's go over a disclaimer. As always, I need to remind you about the risks involved in this market. You can lose all or more than your initial investment if you're not careful. So please be aware of how many pips you're risking on each trade, in addition to how big your lot size is, and ultimately how that would affect your account if you were to lose money. So make sure that you're going through that process each and every time that you take a trade. All right, guys. So here's what I want to do. I want to spend a lot of time going over. I'd like to spend some time like in the charts talking about specifically I want to show you guys. So right here, like I was saying, we're going to talk about the 3-bar reversal. And again, this is actually a strategy that I used. It's a simple setup, very easy to find. You can find it on any time frame on pretty much any financial instrument. The 3-bar reversal is one of the things that I used to get myself funded for the very first time. It's also just very, very simple, straightforward. It doesn't require a lot of like insight. You can find these pretty easily. So I want to help you guys identify one. Let's go look for 3-bar reversals and let's explain what it is. And then let's also spend some time talking about the different types of candlesticks out there. So you've probably heard of like a doji, a hammer. You've probably heard of a shooting star. There's a lot of different types of candlesticks out there, and I want to make sure that you guys have a pretty good grip on what those are. Maybe we should start off first by talking about the different types of charts you can put on. So for those of you that are kind of new to the market, let's actually go to a currency. Let's go find a trade that doesn't have, let's go find a setup that, or a chart that doesn't have anything on it. So let's just go over here. Yeah, let's delete all this and let's just kind of use this chart. Okay, so when you're pulling up a chart, doesn't matter if it's on TradingView, on MT4, or any other platform out there, most trading platforms are going to give you, in fact, all of them should give you the option to look at your charts as far as candlesticks go. So you have candlesticks, and you actually have up here in TradingView, you can change this to different things. You have bars. So these are bars. They're not as cool looking as candles, but you can change it to bars. You can come up here and you can change this to Heikinashi, which is, I don't like Heikinashi, but and I don't need to go, I'm not going to go into what Heikinashi is because it's an elusive type of candlestick. It's a candlestick, but it's not really true, if that makes sense. And anyway, I used to use these like 7 years ago, 8 years ago. I used to use Heikinashi for a strategy, and it only lasted like a couple of months, and then I lost my interest in Heikinashi. I've never used it again. So there's no real reason to use a Heikinashi chart. Then there's hollow candles, which are just candlesticks, but instead of being the normal candlesticks, these ones they're hollow in the middle. That's all that is right there. And you can change this to line. Line is pretty common. I'd say candlesticks are the most common, and then you've got line charts like this one are the second most common. People like line charts because if you don't like to look at candlesticks, the line chart just tells you where the price is, as far as represented as a never-ending line. Okay, so you got line line charts. You have lines with markers. I'm not sure what that does, but there you go. Step line. So every time a new interval pops up, so every hour it draws a new line. Yeah, I'm not a big fan of that. I don't know anybody that uses that. You've got an area. So that's kind of cool. It's a line chart that kind of fills in an area, which is kind of cool. This is an high-low. Oh, okay. This is a high-low. I'm not sure what the C is for, but high-low area. So this is just kind of showing you the area of the candle. If it were candlesticks, this is what it would look like, is represented as a line. Baseline. Okay, so shows you if the market's above or below its average. I think that's what that's trying to tell you. I haven't even used, here's a column chart. So many options, high, low, Renko. Oh my gosh, it's been a long time since I've used a Renko chart. Yeah, I had a strategy that I used many years ago. I used a Renko chart. Um, no. And there's this one, line break. Okay, I don't need to go through all. I pretty much went through all of them, but guys, the main one is candles. Okay, so this is a candle chart. Now, why do we like candles so much? Like, why do you, when people look at charts, why do they use candles and not something else? And why do people choose candles over line charts or line charts over candles? So the reason why I think people choose candles is because it tells you the most information about the market. You can paint a picture and you can get the most information from a chart when you're looking at candles. So let's actually kind of break that down. So let's actually zoom in on a candle. What's the most interesting candle here? I think most people would say, well, it's this guy right here. That's the most interesting candle. It's got this big, long wick at the top. We call that a wick because, candlestick wick, right? So that's called a wick right there. Let's zoom into it and talk about that candle because it seems to be the most interesting one. So I think that how do you start your conversation when you're looking at a candle? So when you're looking at a candle, the most interesting feature is whether it's green or if it's red, right? Or if you got a different chart, sometimes they're blue. You could actually change these to whatever you want them to look like. I just choose green for bullish and red for bearish. So green for up and red for down. To me, that just makes the most sense. Just like at a stoplight, green is go, red is stop. So I just kind of associate green with upwards and red with downwards. That's just kind of how I view things, right? So So that's the most interesting feature of a candlestick is whether it's green or whether it's red. So if it's a green candle, that means that during this interval of time, the market moved up in price from where it previously was. And if it's a red candlestick, that means it moved down in price from where it previously was. Now, another important thing to know is that when you're looking at candles, every candle represents a period of time. Okay, so if this is actually a daily chart I'm looking at, it doesn't matter really what time frame. I'm just using this for illustration purposes. So this is a daily chart, and daily time frames means that every single candle you're looking at is a full day's worth of price action. So um, that one candle right there represents 24 hours of movement. The very next candle represents another 24 hours, and then it concludes and it goes into the archives of history, and then the next candle shows up, and then the next candle, and then the next candle every day. If you're on a 1 minute chart, every candle represents 1 minute. If you're on a 5 minute, every candle's 5 minutes, and so on. It's funny, I didn't feel like I knew that until like later on with my trading. I always thought, oh, 5 minute just means it's easier to look at the charts for a certain type of trading style. And no, it literally means 5 minute chart, 5 minute candles, daily chart, daily candles. That's what that means. Okay, so when you see a green candle on a daily chart, that means that during that day, the market went up. And if you see a red candle, that means that the market went down during that particular day. Okay, so that's the number one characteristic. The next thing you'll know is probably the body is the next thing you'll note. So you'll see there's a solid part that's green or maybe a solid part that's red, and then you've got these wicks, right? So the solid part has to do with the open and the close. So if it's a green candle, that means it opened at the bottom and then ultimately closed at the top of that candle, of the body of the candle specifically. Okay. If it's a red candle, that means it opened at the top and then it closed at the bottom. So the price sank during that period of time. And that's why it's the body itself is just the open and the close. That's it. Now the you'll see here this candle has a huge wick up here. Okay. And it also has a pretty big wick at the bottom right here as well. Those wicks represent how far the market moved during that indicated interval. So this is a daily chart. So during this daily interval, this candle at one point reached this price pretty high. It got all the way up to here, but it did not hold its price action. It did not hold itself up, and it ultimately pulled back during that same interval. And at one point, it started here because that's the open, right? And it ended right there. And it at one point was all the way down to here. So it had this crazy movement, all the way up to here, all the way down to here, but it ultimately closed right there. So it only moved that much price action in 24 hours. But during this period, it had a detour down to here and it had a detour all the way up to here. That's what that's trying to say. If you look at the next candle, this next red one, it opened right here, right at the start where the other one closed. It opened right there. It closed right here. But during this interval, at one point it was up to there, and it was also down as far as there, and then it came back up. So the market, you often see people saying the candlesticks are painting. So yeah, they paint a picture for you. The picture is on this one, the market was at one point all the way up there, but then pulled back. That's what it's painting, right? Okay. So that's how that's just generally a concept that I think is important to understand. Okay, so that's how you read candlesticks, at least from a sense of the mechanics of how it works. From there, once you know how they work, you can extract a lot of information as far as how to make a trading decision and like what type of trade you should take and all that kind of stuff. So for example, if I saw a candle like this big one that we've been really interested in here, this has been a very interesting candle. When I see a big fat wick like that, what does that tell you as a trader? What story is it painting when you look at this story? Okay, so let me actually rewind. Let's do a rewind right to here when this candle first came out. If I saw this in real time, to me, that tells me a big picture. Well, the picture is, oh my gosh, this market's struggling to, yes, it's going up, but it's starting to struggle in its attempt to break higher. Now, should I just make a trading decision solely based off of that? No, but is that a good clue? Absolutely. It's a huge clue. So for me, I look at this and say, wow, this market's really struggling to stay up there. That's probably going to come back down. Right. And then sure enough, as the market progresses, you start to see a move to the downside, right? Because of that big wick. Let's find one on the opposite side. Let's see if we can find a candle with a huge wick at the bottom, like over here. Yeah, like you can see, let's do it right here. Kind of decent size wick right there. What does that one tell us? Let's zoom in. What does this one tell us right here? Yeah, it's the market came down, went down pretty far, but wicked back up and closed up here and actually closed positive. Well, that tells you that the market's really struggling to push the market even lower. Yeah, it also tells you about manipulation. That's another thing. But yeah, nonetheless, the storyline is that the market is pushing lower and struggled to push even lower, so it came back to the upside. Okay. Let's find more stories. This one was a short-term one. This one pulled back, came right back up, and then ultimately came down later. But it's kind of interesting, nonetheless. You got some pretty good wicks right here that ultimately led the market higher for a little bit, right? Let's find some more. Yeah, that's a pretty good one right there. Yeah, right here, you've got this guy, and you also have this one right here, right? Yeah, there's a lot of really good wicks up here. A lot of good ones right here. Right? So the market just went up and tagged a bunch of liquidity. It appears it just tagged some liquidity and then ultimately pulled back. It's very interesting to see. Okay, so that is just the essence of a candlestick. Okay, so let's see, what other information can you get? Okay, we talked about wicks. Okay, so we talked about candlesticks that have big long wicks at the top and big long wicks at the bottom. What about candles that look like these? where they're basically solid. Okay. These are marching candlesticks. There's other names for them, but I just call them marching candlesticks. Um, if it marches up, it marches up. If it comes down, marches down, some people call it like a falling knife pattern. We'll have to go find one that looks like a falling knife. And have you ever heard the phrase, don't try to catch a falling knife because you can get cut? It's a kind of a terrible image to catch a falling knife, right? But that's kind of how it is with trading. If you just get into the market too early on something, you can get caught and catch a market that's just going to continue lower. So that's why you have to be very selective with a lot of your entries and know when to do it. So I often don't like to trade on markets that are marching one way or marching the other way. They're not, usually you're in the wrong direction if you trade that way. So when you see a market marching like this, where it's coming up pretty significantly, these candlesticks don't have really big wicks for the most part. Usually they're followed by candlesticks that are very similar to each other. So they march and you produce another soldier that looks like another soldier that looks like another. They look very similar to each other. They act and behave very similar to each other. So when you see candlesticks like that, where they're just marching consecutively, typically the following candlestick is very similar. Not always, but that is often the case. Like over here's a really good example of what I was just talking about. So these two, so you have this market right here, pretty big bullish move, little bit of a wick here. I don't know if I'd be convinced on that, but then this next one's marching. So the next one likely to marched here, and it just continued to march up. Over here, the opposite happened. You have that falling knife phenomenon. A lot of wicks through here, but then it starts to just march and then march and march and march and march, right? Very few wicks. There are some, but they just, here's another really good example. Just marching. This is very much in an expansion mode. Expanding, 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 right? Yeah, so if you see big, long candles like that and no wicks, probably going to continue lower, right? Right here, big, long candle to the upside, mostly continues higher for a ways, and then it flips. Right here, mostly good, solid candles, right? Okay, so that's another thing that you want to look out for when you're trading. So when you're looking for liquidity opportunities and you're looking for trade setups, make sure that you're kind of analyzing how do the candlesticks look right now, right? Let's go find another. Let me show you some other stuff. So one of the trades I'm excited about this week is the I think it's the pound franc or the dollar franc or both. I can't remember. Let's go look at either or both of those real quick. And let's pull up like an hourly chart. Okay, so one of the things that got me pretty excited and that has me pretty excited about this pound franc this week, and we'll see if it actually plays out, but this is one of the trades we have, is the candles have been largely just consolidating, but we're consolidating with an upward trajectory. Like the market's generally going up here. Overall, there are dips along the way, and the candlesticks are pretty tight together. They're pretty dang tight. And we're also breaking structures to the upside, which is something that we've talked about this week. We're breaking above and we're starting to push higher. So at some point, I imagine that the pound franc will experience some kind of expansionary move because we've been in consolidation for a long time. So expansion is coming, and we're hoping that that expansion will be to the upside. It could expand down. We'll see. But that's what my hope is that we expand up. And the price action sure indicates that it wants to expand to the upside. So we'll definitely see. Yeah, so those, but back here, I wouldn't have been as excited because you've got a marching candlestick pattern to the downside here. Same thing over here. You've got a candlestick pattern that just continues to march down, but now it's starting to flip. You're not really getting those significant marches to the downside. We haven't had one in quite some time now. It's mostly been either sideways and or with a slight scent to the upside, right? So good stuff. Plus we have the COT report telling us to buy anyway, so I'm feeling pretty good about it. You also have other things like this pound yen generally breaking structures to the upside. We actually did have an expansion right here. This is kind of interesting with this pound yen. You had a nice big wick here at the bottom. You actually had a pretty big wick up here at the top too. It's been erased since because the market's just marched to the upside. But the market pretty much came down. This is actually another clue when you're looking for trade setups. Look how fast the market pulled back, but also quickly recovered. The fact that the market pulled back so hard, but also recovered so even harder, it recovered better than it pulled back, if that makes sense. I hope it does. So basically this recovery to the upside was more compelling than the initial move to the downside. And because such, that's why I'm looking for buy opportunities throughout the week on the pound yen. Okay. And that's not just from the COT report. That's also from more of a price action perspective. It's just another clue. What are the clues telling us? The clues are saying, hey, yes, it pulled down, but it came right back up. And not only did it come back up, but it broke all sorts of structures to the upside. So yes, we need to be looking for buy opportunities. And I don't believe that the pound yen will come back down to this area at this point. I mean, it could. We've already kind of discussed that this is kind of our zone right here that we're hoping for. So we'll see if it plays out. I'm pretty sure it will though. Yeah, I definitely see a higher pound yen by the end of the week. That's definitely something I see in the books. I mean, ask yourself this question, okay, we just made an argument for the pound yen to go up. Is there really an argument for it to go down? Yeah, I mean, throughout the week, yes, there'll be pullbacks. Yes, there'll be pullbacks, but will it be overall down on the week or will it overall be up on the week? And I would argue that overall up on the week is the idea because you've got, I mean, there's all sorts of arguments for that. Breaks the structures of trend, breaks the structures from a resistance standpoint, a quick V-shaped pattern here, and the recovery is more impressive than the initial move to the downside. The fast, the liquidity that was grabbed down here that was immediately sent to the upside. So yeah, I mean, the arguments for the up are much more significant than the down. Also, COT report is another thing. So yeah, I have to just make that, okay, probably going to go up this week. And yeah, David, yeah, there are a lot of news events this week. I know there's NFP, we got rate statements coming out. For me, yeah, there's definitely things, but for me, that's not really going to drive me away from the market, but they are good to know. Definitely good things to be aware of. Yeah. And sometimes those news events can actually help us take the market where we want it to go. So all right, guys. So let's see. What else do I wanted to show? So this is an example of looking for clues based off of candlesticks. Okay. Let me show you one more example of looking for clues based off of candlesticks, and then I want to show you guys the 3-bar reversal pattern, which is actually a great way to look for some additional trades throughout the week. So let's look at what's another good example. Yeah, so this euro yen is very similar. Let's maybe do the dollar yen. Yeah, okay. So with this one, it's very interesting. This one overall was going up and then it had a pullback right through here. Let's actually expand this out. It had a little bit of a pullback through here. Then it created a series of wicks down here. It actually had a pretty big wick up here as well and pulled right back. But ultimately, it marched to the upside. But not only did this dollar yen march to the upside, it had a nice little, I think, yeah, that's a nice little trend right here. Okay. Broke that trend right here. And it also broke, this was a apex high. And the market broke that too. So we have 2 breaks of structure quite recently. You have a trend break right here, right? 1, 2, 3. and then you have a break in the trend and a break in the resistance. Both of those are to the upside. So what should the expectation be? Continued prowess to the upside should be the expectation. Can it pull back? Yes, but you should be looking for buy opportunities on pullbacks, unless, let's say, for example, this thing just went straight through that. Well, now all of a sudden we're breaking structures to the downside. If it just tanks, well, yeah, no longer we're not looking for buys anymore. In fact, we're thinking sells at that point. But right now it's definitely looking for buys. So what are the candlesticks telling us? Well, you've got a marching candlestick pattern through here, right? You have series of buy candles, big long green candles, one after another after another. And now, and not only that, but they're breaking structures too. So it's very significant. This tells us that somebody somewhere, or a series of people, banks, institutions, firms, layered up pretty big down here. They were fortunate to buy in these areas, and they're planning on a higher pound yen by the end of the week. That's the plan. That should be our plan. This is a higher pound yen. I mean, what else? I mean, what else you got? You want to email me something? Like, if you find something else that I'm missing, then let me know. But that should be the expectation. And always, guys, just as a reminder, just because I'm confident about what I'm looking at and what I'm reading doesn't mean it will always work. I like to have confidence when I go into stuff. Like when I take trades, I really like to go in with a lot of confidence. I like to put big fat trades on these things. All within reason, though. I still use my lot size calculator. I still risk 1% per trade or less. And I still use, a standard stop loss that will get me out if things don't go the way I thought they were going to go. So I still do all of that. But once I do all of that, then yeah, as long as I have those things to protect me, then yeah, I have all sorts of I go in with all sorts of grit and prowess, like, determination to take the trade. But if, that's what I'm looking for. I don't want to go in there scared. I want to go in there confident when I take trades. Okay, so these are the clues. These are the clues that we're looking for. Is okay, we have candles, a marching candlestick pattern. We have wicks down here. I know there's a big wick right here. It did come back, and that would be something that would be a bearish signal. However, the fact that the market marched right through all of that and is continuing higher negates that move. Does that make sense? If this market did not create that big move following, then yeah, I would probably say maybe we should be a little more cautious, and maybe even this market pulls down and continues lower. But that did not happen. The opposite's happening. It's actually just marching to the upside. Craig says, can I trade the US 30 by itself, not paired with the US dollar? I'm not able to through my funded account. What would you do differently? As that is the case. Yeah, it just depends. Like I said, I mentioned this morning, some prop firms don't hold NAS 100 or US 30 CFDs. But if you have the ability, like you said, just to trade US 30, you should be good. Like David says, it's the same. Yeah, you should be good to take that pending order as long as you're. So like, here's the signal that I posted on Friday that you guys can take. Let me pull it up. Here's what it looks like. Yeah, it's this one. As long as these prices are the same, you'll be good. You'll be good to take that trade. And again, just as a reminder, make sure you're using your lot size calculator, and yeah, go into trades with confidence for sure. Just make sure you have to protect. We're all human, right? So we have to protect ourselves from our human side. How do we do that? Use a lot size calculator, use a stop loss appropriately, and you'll be fine. Right? That's how you protect yourself against your human side. Right? Okay, cool. So this is an example of what I was talking about. And then again, the euro yen is also a good example. This is the dollar yen. This one's very similar. Again, what's this one doing that's different? not really. It's mostly the same. This guy had a nice little trend right through here. You had a nice multiple points of engagement right through here. You had a nice, actually that counts too. And then you had a nice perfect little break right there. Not only did you have a break there, but this was some resistance right through here. Here, let's draw it out like that. You had a nice, that's support. This is support right there. And then this is resistance right through here. And the market broke that too. So you're breaking structures from a resistance standpoint, and you're also breaking it from a trend line standpoint. And both of those things just barely happened. So I don't know how to say this other than the euro yen, pound yen, dollar yen, bullish as heck right now. Yeah, just like not only are they breaking the trend line, but they're breaking all sorts of resistance too. I think it even broke this. Yeah, it broke this too. There's a little resistance right here, little thing going on right there. It broke that too. Yeah, the chances of this thing pulling back significantly, like down to here again, really, really low to get back down to there, because there's going to be far too many people trying to send this higher. Far too many people trying to send this higher, either here, or maybe they wait for it to dip a little bit down into here, which is kind of what we're trying to do with the pound yen right now, and then send it higher. So those are kind of really the only two options with the euro yen, dollar yen, pound yen right now, is just dips like that. Again, don't go bet your farm or your house on this, but yeah, definitely take these trades, have them open, take them, take advantage of it. You know, it's it's there for the taking, right? But this is kind of how you go through that process. I know this is a little bit more than candlesticks. We did some more price action stuff here, but this is the kind of stuff you want to look for when you're trading. Now, quick thing I want to show you guys. I'm curious. Let me delete this. Now let's talk about the 3-bar reversal. So when we're looking at candlesticks, this is something that I used to do when I was kind of a beginning trader. This was an easy way to just find setups. I would go to a different time frames. So I want to show you this. Right here, this candle is an engulfing candle slightly. So does everybody know what an engulfing candlestick pattern is? If not, let me explain it real quick. So an engulfing pattern is basically where there's a couple of different ways to describe it, but one of the ways is to simply look at the current candle you're on, or a previous candle. And if that candle is engulfing the previous candle, meaning it's bigger than the previous candle, then usually the following candle will continue in the same direction as the engulfing candle. So for example, here it's the same thing with the euro yen. This is a daily chart. 2 or 3 days ago, we had a pretty down day on the euro yen. Euro yen dropped significantly here. But then the following day, you had this big long wick down here, coupled with a candlestick body that engulfed entirely the previous day's damage. So whatever happened in the previous day, it completely was recovered the next day by this candle. And then the following candle ended up being bullish. That is very common. So I don't do this anymore just because I like how I trade price action, but I made some pretty good money doing this as a really beginning trader several years ago. I would just go on the daily chart or 4-hour time frame, and you can do it on any time frame too, but I like the dailies just because I wanted to have kind of a directional bias going into the next day. And I was just looking for this type of thing. Like, oh, okay, all right, here I've got an engulfing green candle. Okay, so the next day is probably going to continue that direction. And then I would just take a trade, to continue that activity. Not a bad way to do it, right? Let's go find another example. So you need something to engulf. Yeah, so right here, you have a bearish candle right here. You actually have 2 bearish candles. This is even better. You have 2 bearish candles right here. It was preceded by these 4, 5, 6 different candles to the upside. Then you have 2 bearish moves, right? But then you have this one candle that just comes out of nowhere. He just totally engulfs these previous 2 candles. When you see something like that, the next day is usually positive, which is exactly what happened here. So you have This candle right here is the next up move the following day. And he probably showed up in part because this candle was so significant that he engulfed the previous two candles. That's called a 3-bar reversal. So you have a candle that engulfs the last two candles. That's called a 3-bar reversal. Okay, let's try to find another 3-bar reversal. And again, it's got to engulf the previous 2-day candles. This is actually count right here. So you've got this green candle right here. He's bigger than the previous 2-day candles put together. Does that make sense? So you have, let me see if I can draw this out. You have candle 1. I've never done this. Let's see if this does it right here. So you have 1, and then you have candle 2. I'm not sure if this is the best way to do it, but we're going to try it. Candle 2, and then you have candle 3, and those are both bearish candles. And then your candle 3 is this guy. I'm going to put him up here, right? And then that's a setup. That's actually in a setup. This is a very simple strategy, guys. Just it's called the 3-bar reversal. That's all it is. So you have 1, 2 candles, and then you have the third one that engulfs the previous 2. Typically, your 4th candle is going to be in the same direction as the engulfing candle, which is exactly what happened right here. So this is number 4 right here. This is the day you would trade it, is the 4th day, because it took 3 days to get a setup, and then the 4th day you got your setup right here. Pretty cool, right? That's a really simple strategy. Let's do another one. Let's see if we can, again, it's got to be, if you want to do it there's other way. Anything engulfing's pretty good. Anything that engulfs is great, but if you can get the 3 bars, it seems to be better. Let me know if you guys see one, but sometimes I miss them. Let's see if I can find a pretty good one. I'm looking for the one that engulfs the previous 2. And the previous 2 do have to be bearish or bullish, and then you get your next one. So that's important distinction as well. And if you need more opportunities, just go to a smaller time frame. But I like the daily is kind of fun if you can find them. See, this one doesn't quite count right here. You got 2 bearish, but then you have this bullish move, but that bullish move doesn't engulf the previous 2 days. So that doesn't quite count. Oh, I found one right here. Yeah, here we go. I just saw it. I need to slow down. Yeah, so right here, I'm going to circle, or can I, actually, let's just do this. It's this right here. And let's change the settings on this so that it doesn't extend out so far. This is super fun. I like doing this. This is very simple. Like a lot of people get super hung up on some of our other strategies, but this is just an easy, simple way to do stuff. So here's a setup right here. These 3 candles, that's a setup. Why is that a setup? Because you've got candle 1, which is bearish, right? You have candle 2, which is also bearish. And then your 3rd candle is engulfing the previous 2. So what's the 4th candle likely to do? Also be bullish. Pretty cool, huh? And that's exactly what happened. How far did that go up? Then very next day, that candle went up 58 pips the very next day. So you would have got 58 pips on that one. This is technically a setup, but it's not the traditional way of doing it. Like this is a 3-bar reversal right here. But it doesn't, the problem is that this first candle is not bearish. You've got 1 candle, 2 candle, and then a 3rd candle that is pretty massive, right? But and it does engulf the previous 2 candles, but only one of them's bearish. So you can do that. You can take those, but it's not the traditional way of doing it. Okay, here's a good one right here. I see one. You guys see this? Pretty cool one right here. This is traditional right here. This counts, right? You got candle 1, which is bullish. You you have, oh, you said, but wouldn't that have been a signal to sell? Like right here, you're talking about this one. Um, oh, you're talking about this. Oh yeah, technically, I see what you're seeing. Okay, so I was looking at I was looking at this big green candle. I see what you're saying. Okay, yes. So this is actually a good example of one that would have not worked out. So I see what you're seeing, Brooks. So yeah, good catch. So you have two green ones right here, and then you have a bearish one that engulfs the previous two. And yes, that would have been a signal to sell, and you would have lost on that one. Yes, that's actually a good catch. Yep. So there's a loser. That's what a loser looks like. Yep. Yeah, good catch. I was not seeing that. I was looking at just this green guy right here because he was so big. Yeah, that's a good catch. All right. Here's a good example of one that would have worked pretty dang well, because you've got your first green candle right here, second green candle, and then this big, massive bear candle. And that engulfs not only um, that that bear candle not only engulfs the previous 2 days, but it looks like he engulfs the last 5 days, 4 days. Yeah, 3-line streak, pretty crazy. Yeah. And then what happens on the candle after the engulfing candle? Pretty sizable move to the downside right there. So how many pips is that? Possibility to make on that one would have been as high as 231 pips, but it looks like you would have made by the end of the day 183 pips. Pretty cool. Let's find some more examples. Let's find, again, you want two candles from the previous that are bearish or bullish, and then followed by an engulfing candle. And that's the most, I would say, the purest way to trade it, but there's other things you can do. Like I said, you can, if you have one big fat candle that engulfs other candles, that might work. Okay, here's an example of one that wouldn't have worked out. It would have worked out over a few days, but not over the next day. So here's one that wouldn't have worked. So you have two green candles followed by a bear candle, and then you have a bullish candle on the fourth, which is kind of out of the expectation. You wouldn't have really expected that, but that's what it did. So they don't, like I said, nothing's guaranteed, but that's an example of one that would not have worked. Okay, let's find another example. And then, David, you're talking about the wick was a sign for it to lose. That's with this other one that you're talking about, this guy. So pretty big wick right there. That could have steered you out of that trade, so you would have missed that loss. But we're just trying to say, and that's a good point. If you're just going off of it from an objective standpoint, you would have lost. But if you had taken that extra step and looked at that wick, you might have missed out on that bad trade. So that's pretty good if you had gone through that process. Okay, let's see if we can find another good one. Sometimes they're hard to find. And you may need to, if you're trying to find an opportunity every single day, you'll probably want to look at every single currency pair to find your setup. You'll want to look at all 28 currency pairs. Here's a marching pattern. So we talked about this earlier with candlesticks. If you have a marching pattern where you just have candlestick after candlestick after candlestick, that's just bullish, 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 and not a lot of wicks, usually they just continue like this one does. Just continues one after another, after another, after another, just continues. Okay, where's a good example? Trying to find a, yeah, sometimes they're hard to find in the way that I describe it. Because you have to have, oh yeah, here you go. So here's one right here. Boom. So you have candle one right here, bullish, second candle bullish, and then the third candle extremely bearish, engulfs that entire range. And then the fourth day is a move to the downside. Not a huge down day, but yes, it is to the downside. So you get that little down move right there. Oh, here you go. Here's a good one. Here. So you got two bear candles in a row, and then you have one green candle that's pretty, no wicks on it, which is good. Just solid bull candle. The following day actually didn't do much. It was kind of a back and forth day, but had you stayed in that, it looks like it would have really played out over the next several days. Yeah, that's kind of cool. So it's another little strategy you guys can play with. Here's another really good one right here. I just saw right here. This guy. Two green candles in a row, actually multiple green candles in a row, but at least you have two. And then the third one is a massive bear candle, and then it just continues bearish for a while. And you can look for this on any time frame. I would say if you're going to trade on the 1 minute or the 5 minute and do the same thing, make sure you're trading around times of volatility. Daily charts don't really matter a ton because daily is daily. So you're not really looking for volatility as far as a day-to-day occurrence. You're just looking for the setup just generally. But if you're going to trade on a 1 hour, yeah, you're not going to find a lot of setups around the afternoon, probably none at all. And if you find them in the afternoon, they're probably not even going to be that good of a setup, right? They're probably not even going to be that good. So you want to look for setups when there's actually volatility. So around the market open of like Tokyo, London, or New York, those would be good. I think this one is a engulfing candle right here. I just saw there. It engulfs the previous two. And then it goes up. This one right here, pretty good. Engulfs the previous two. And then it goes up. All right, guys. Well, I'm probably, let's see, I wanted to find one other example, but I think we've already seen plenty. I'm probably going too far, but yeah, here you go, right here. This is a good one. This is pretty good. Not only that, but it has a good wick here at the bottom. Nice little wick. So you have two candles in a row, bearish, and then a nice big bull candle that engulfs the previous two, and then it's just up, up and away from there. Oh, here's another one. Nice one right here. Nice. Pretty cool. All right, guys. Well, I'm going to go ahead and wrap up. I hope this was helpful. 3-bar reversals. And then that's something I showed you guys. We also talked about market structure, how to read candlesticks, what they're trying to tell you over time. Whether you have a series of solid candlesticks or a down or up, what that typically means. We talked about the wicks. When you have a big wick at the top or wick at the bottom, often or a series of candles that have big wicks at the top or a series of candles that have wicks at the bottom. It's telling you that the market's finding a bottom typically, and it's going to start to curve up. And just some things to think about when you're taking your trades with your normal setups and you're looking for breaks of structure. If you can add this to your toolbox, it's going to help you take even better trades, right? All right, guys. Well, I'm going to go ahead and wrap up with that. Appreciate your attendance today. Thank you for coming, and we'll see you guys in the next webinar.